What if I told you that virtually every naturally occurring entity on Earth shares the same distinctive pattern? It's an unmistakable pattern found in hurricanes, in beehives, in strands of DNA, in the human anatomy, in conch shells. You can even find this recurring pattern in masterpieces like the Mona Lisa and the pyramids. Odds are, you don't even know this pattern exists, but I assure you that it's everywhere, at all times. Now, what if I also told you that this recurring pattern is imprinted on every stock chart, and that this very pattern is used by Wall Street's richest firms to gauge the perfect entry points into their trades? Would you believe me? Well, in the next few minutes, I'm going to reveal a truth about the stock market that 99% of Main Street investors aren't benefiting from. This single truth could have helped you navigate the 2008 financial crisis, the flash crash of 2010, even the summer of 2015's Black Monday, when the Dow was down over 1,000 points in a single day. This single truth could have helped you invest alongside the 10 biggest stocks of the last decade. Most importantly though, this single truth could have led to cumulative gains as high as 39,207% on those same 10 stocks, with 187 different entry points. The information you're about to discover has never been released for public consumption. That is, until now. Have a pen and paper ready, because I'm going to cover 1. A distinctive and recurring pattern that can easily be identified on any stock chart. Google, Priceline, Apple, Intel, it doesn't matter. 2. How you can easily find this pattern with 3 simple clicks of your mouse. 3. I'll show you how this recurring pattern could put upwards of $76,000 in your pocket over the next 10 months. You don't need a degree in finance, and you won't need any special accounts to start harnessing the power of this recurring pattern. It works in up markets and down markets, which could really save your butt when stocks get scary. I'll also show you how to claim a free year of my research service, Trigger Point Pro, the only publication on Earth dedicated to pattern trading. Okay, let's get started. My name is Here's how I came to be regarded as the market's foremost pattern trading expert. For the last 3 years, I've managed every single entry and exit for a major financial publications model portfolio. During that time, I've had a hand in 136 winning trades worth upwards of roughly $36 billion. How'd I accomplish such an extraordinary feat? Well, the strategy I used is now being taught in finance and economics classes at Ivy League institutions like Harvard, Princeton, and Yale. Even the prestigious institution MIT offers full curriculums on it. Business Insider recently documented this strategy's predictive powers, saying, quote, "It's an easy way to remove some risk. It also gives a quick indication to exit a position," end quote. Following the example in Business Insider's article, you could have pocketed upwards of $50,000 as the British pound gained strength against the Japanese yen. MarketWatch recently published its findings on this incredible strategy too. In fact, it used a variation of my strategy to predict a subtle ripple in the stock market, one that could have put a quick $7,070 in your pocket. Oh, and every hedge fund on Earth now uses variations of my strategy as well. But despite the fact that my star is rising on Wall Street, Goldman Sachs can't have me. Morgan Stanley isn't going to get me either. I'd even say no thanks to any of the bigger hedge funds out there, like Appaloosa or Bridgewater. Fact is, I've got it too good right now. Virtually any Wall Street firm could easily ask me to turn over my proprietary files, but my publisher, Robert Williams, gives me total control. Every winning trade in history started with a perfect entry point. Robert always says, just keep doing your thing.
When I first asked to join us here at Wall Street Daily, I put an impossible task before him. I asked him to develop a universal system, a system that worked for every single recommendation we publish over the course of the year. Now, that can consist of upwards of 100 to 200 trading ideas. And because of our multifaceted research approach on any given day or week, we could be talking about various sectors, various industries, various trends. It could be related to small caps, it could be related to options, futures, bonds, even currencies. But the system I challenged to develop had to work for all of them. I originally had my doubts, but he quickly emerged as basically the head of our research department here at Wall Street Daily. I mean, the numbers tell us everything we need to know. We're talking about 136 winning recommendations during tenure, unlocking an estimated $36 billion in profits. Suddenly, I was the one with the impossible task. That is, keeping from jumping to one of the big Wall Street firms.
It's the rise of cyborg finance that makes all of this possible. I'm talking about supercomputers replacing human beings to make buying and selling decisions. Cyborgs have been 10 years in the making. They're not a nascent trend, and they're definitely not a passing fad on Wall Street. Remember the trading pits glorified in movies like Wall Street and Trading Places? Well, they're empty now. Supercomputers have replaced virtually everyone. Over the last 10 years, I've witnessed Wall Street's massive push towards cyborg finance. Supercomputers are smarter than people. They make more profitable trades than people. They don't make mistakes like people. What about market makers and pit traders? Well, they're headed toward extinction. It's already happening to the tune of $65 billion a day. That's right, supercomputers now comprise 75% of the total order flow on Wall Street. With the computers now fully in control, you can't afford to ignore their impact any longer. You see, these cyborgs have one big weakness. They always leave a footprint. It's a pattern that repeats itself over and over. You can see it clear as day on any chart. It doesn't matter if it's Apple, Yahoo, Amazon, Netflix. You can find this same profit-generating pattern on all of them. In fact, with just 3 simple clicks of your mouse, I'll show you how to easily identify this pattern. The potential profits are literally endless. Here's why. All of these supercomputers, whether it's Goldman Sachs, Morgan Stanley's, or BlackRock's, they're all using virtually the same inputs. Real-time inputs like trading volume, institutional buying interest, broad market indicators like dollar strength, liquidity, sentiment, and PE ratios. The list goes on and on. But when you're using all of the very same inputs, you're highly likely to get the very same output. And that's why we're now seeing easy to recognize patterns appearing on charts. A perfect way to visualize this phenomenon is to randomly start 32 metronomes and observe how they behave. In the next few minutes, you'll begin to notice them all synchronize. Why is this happening? Well, it's pretty simple actually. The answer is bound to the law of fractals, which states that statistically similar entities always pair up over time. When I randomly started those metronomes, no information had traveled between them yet. So they didn't know each other at the beginning. They were uncoupled, so to speak. But in a few short minutes, the metronomes will discover a unifying energy and begin to gravitate toward it. Before long, they'll all be operating in perfect harmony. It's already beginning to happen, in fact. Synchronization occurs at the most efficient point. Now, here's where it gets crazy. Wall Street supercomputers are pairing up or synchronizing in much the same fashion. Synchronicity happens around the most efficient entry prices. I'm one of the few analysts in the world who can pinpoint the price at which this synchronization point occurs, down to the exact penny, which is why the biggest Wall Street firms could be hot on my trail. I'm able to accomplish this feat using one simple, elegant number that explains everything. The number is known as phi. I'd like to give you a bit of phi's history. First off, the value of phi is 1.61803 to infinity. Of course, you won't need to know any of this to start identifying recurring patterns on charts. But since phi is among the most powerful numbers in history, I thought you'd enjoy learning a bit of its fascinating backstory. Phi was first brought into practical use by a mathematician named Leonardo Fibonacci. In 1202, Fibonacci challenged himself to explain population explosions. In order to do it, he investigated how fast rabbits could breed under ideal circumstances. The answer, as it turns out, is found in a mesmerizing series of numbers, now known as the Fibonacci sequence. The sequence goes as follows: 1, 1, 2, 3, 5, 8, 13, 21, 34, extending out into infinity. Every value in the string is simply a summation of the prior two numbers. In other words, 1 plus 1 equals 2, 1 plus 2 equals 3, 2 plus 3 equals 5, and so on. At the end of every month, Fibonacci discovered that the total population of rabbits was always a number in the series. Now, powerful formulas never outlive their usefulness, and the Fibonacci series is still used today to calculate population explosions in people, especially in the world's urban centers. But in order to appreciate the true genius of the Fibonacci sequence, you have to look even closer. You'll recall that Fibonacci was the first to put phi into practical use. But the first known origins of phi date all the way back to 430 BC in the architecture of the ancient Parthenon in Greece. So where is the value of phi 1.618 hiding in Fibonacci's sequence of numbers? Well, it's hiding in plain sight. Take a closer look, and you'll notice that the proportion between every adjacent number in the sequence is the same. Each number in the Fibonacci sequence is 1.618 times larger than the number that precedes it. So, whereas the famous number pi, 3.14, helps to explain circles, its lesser-known cousin, phi, explains proportions between ranges of numbers. When phi's perfect math is expressed visually, the results can be breathtaking. Wherever patterns in nature occur, phi's proportion holds. Hurricanes, a conch shell, the human ear, strands of DNA, galaxies, even masterpieces like the Mona Lisa and the Last Supper. Can you appreciate why phi is also called the golden ratio, the divine proportion, even the God number? Now, the pattern you just witnessed also occurs in another place of more immediate interest to us right now. Of course, I'm talking about the stock market. Phi can help determine a stock's most efficient price. Remember the metronomes? Well, Wall Street cyborgs always synchronize around the most efficient price. every institutional buying campaign begins at the most efficient price. Heck, with 75% of all daily order flow now coming from cyborgs, these buying campaigns happen to the tune of $65 billion every day. Armed with Phi, you'll know the exact price point where supercomputers begin loading up on shares of certain stocks. Imagine timing your buys alongside, say, a $2.5 billion block trade from Goldman Sachs, or a $1.2 billion market order from JP Morgan. What's the result of so much buying at one price? It's a very distinguishable pattern. I like to call it a footprint, or a calling card. Let's take a look at how simple it is to find Phi's value on a stock chart, and how its predictive pattern could help you pocket up to $76,000 over the next 10 months. I promise it won't take more than 3 simple clicks of your mouse. Now, at the very start, I told you that Phi could have helped you navigate the 2008 financial crisis, the flash crash of 2010, even the summer of 2015's Black Monday, when the Dow was down over 1,000 points in a single day. It's because Phi works in up markets and down markets, which can really save your butt when a crisis hits. But more important to our cause here is Phi's ability to identify perfect entry points. Bottom line, Phi could have helped you invest alongside the 10 biggest stocks of the last decade. Cumulative gains on those stocks ran as high as 39,207%, and Phi collectively identified over 187 different entry points into Regeneron, Medivation, Priceline, Netflix, Illumina, Opco Health, Biospecifics, Alexion, New Market, and Monster Beverage. Here's how it works. For our example, let's lock in on Regeneron Pharmaceuticals, which gained 7,102% over the last 10 years. Although I'm looking at a daily chart of Regeneron with a time frame of 15 years, Phi works on any chart, whether it's a 15-year chart or a 15-minute chart. In other words, Phi can easily adapt to both short-term and long-term investment strategies. This ultimate flexibility will come in handy when you're hunting quick profits over the course of a few days or even a few hours. But let's take a long-term view on Regeneron. Okay, here goes. Click number 1. Choose the Fibonacci retracement tool on your online trading platform. Click number 2. Choose the outlying low, which occurred on April 18th, 2005. Click number 3. Drag your mouse from the outlying low and connect it to the outlying high, which occurred on May 8th, 2007. Voila! A series of Fibonacci lines will automatically appear on screen, the most important of which being the Phi line. In this example, Phi occurs at the $13.85 price point. So, at $13.85, you'd expect Wall Street supercomputers to rush in with well-timed buying campaigns. How'd it play out? Phi provided multiple entry points into Regeneron Pharmaceuticals on its way to over $500 a share. Let's do it again on Monster Beverage, which blasted 2,155% over the last decade. Click number 1. Choose the Fibonacci retracement tool on your online trading platform. Click number 2. Choose the outlying low, which occurred on May 8th, 2001. Click number 3. Drag your mouse from the outlying low and connect it to the outlying high, which occurred on July 17th, 2006. Wham! A series of Fibonacci lines will automatically appear on the screen, again, the most important of which being the Phi line. In this example, Phi occurs at the $10.57 price point. So at $10.57, you'd expect Wall Street supercomputers to begin entering large-scale limit orders for shares. How'd this one play out? FI provided multiple entry points into Monster Beverage on its way to over $130 a share. It works every time. And remember, you can set your Fibonacci tool for 15-year charts, 3-year charts, even 3-minute charts. It doesn't matter. It all depends on your personal investment ambitions and how active you'd like to trade. And FI's other derivative lines are meaningful too. In fact, they can create even more trigger points. You'll never suffer a shortage of opportunities with FI, I assure you. So, are you ready to take the next step? Are you ready to put the power of FI into practice? Well, my publication, Trigger Point Pro, is the only stock-related research service in the entire world dedicated exclusively to FI. It benefits from the very same strategy I used to make good on Robert's impossible task. The proof is in the pudding. Over the last 3 years, I've had a hand in 136 winning trades worth upwards of roughly $36 billion. FI can provide the perfect entry points on currencies, ETFs, commodities, even options. But Trigger Point Pro is focused exclusively on stocks. If you can buy a stock online, then you can easily leverage the power of FI. I'm now accepting enrollment into my next intensive breakout session, where I'll do a deeper dive into the strategy. The breakout session is only a couple of days away. So to find out more about Trigger Point Pro, to grab a seat in my upcoming breakout session, and to grab a full year's worth of access to my research, just click on the link below.